The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Boys and girls, we're going to take a trip down memory lane. This is one of the most important three-day events of my entire life. I think I should share it with you. It all started back on October 2nd when we had a Venus-Uranus aspect at a 61% retracement off of the high from August 25th of 1987. And what happened was we rallied, we went down into September, and then we rallied up into October 2nd, 1987. I bought puts in the S&P that expired on October the 16th. And the Dow was down 106, I believe, that day, and the puts were in the money big time. If I had November puts, it would have been a lot better, but I was very, very pleased. But that was the start of the whole weekend. But on the 17th of October, this Saturday, there was a wedding. One of the members of the Hearst family from William Randolph Hearst, the publishing company. There's a place in California. It's a state park, one of the best in the world, called Hearst Castle. And because he was a member of the Hearst family, they closed part of the castle to have a wedding, and I happened to be invited, and both of my daughters had been in love with Hearst Castle from the time they were just old enough to even go to enjoy it, which was around age 5 or 6. So we were able to go to Hearst Castle for a private party for the Hearst family. He was a great-grandson of William Randolph Hearst. We had this wonderful party right by poolside. It was really, really fabulous all day long. My daughter flew in from Boston. My other daughter was going to school at UCLA, so we got to spend time together. Then my other daughter, the one from Boston, had to fly back because she had to be back at school for Monday. But on Sunday, let's try it again. On Sunday the 18th, there was a wedding in Beverly Hills. One of the big people from my days at Beverly Hills, Louis Bernstein's grandson, was getting married at the Bel Air Country Club. And that's really a really fabulous place, and all the old people from Drexel were there. And I'd only been out of Drexel for a couple of years, so all of my friends were still there. And so my daughter and I, Jill, went to this wedding, and it was a Jewish wedding, just a fabulous thing. I mean, every time when I worked at Drexel, folks, the type of culture that went on there was really amazing. They had parties all the time because of bar mitzvahs and bat mitzvahs and all the weddings and stuff. And this was a huge one. This was really big. There were a lot of movie stars there because Louis Bernstein was an agent for many, many movie stars who I was fortunate enough to have as clients. Some of them I never met, of course, but at least I got to go to the parties and things. So we went to that, and it was just fabulous, and it was just beyond description. But when they raised the young man, part of the Jewish tradition is they raise the young man in a chair, and he happened to be short the S&P, and he said, "Here's to 100 down points in the Dow, on Monday." And this was the 18th, and it was just a fabulous party. But the culture at Drexel, our office was on Rodeo and Wilshire Boulevard, the 4-story building that Mike Milken later bought. Well, he owned it at that time, but every day that people came to work for Milken, most of them got there between 4 and 5 in the morning. If you got there later than 5, you probably didn't work there very long. But all the meals were catered. Margot Grant, who was Jim Twentyman's significant other, she was a caterer. She had a catering company, and in fact, she still has a catering company, but it's not in. She lives in Texas now. But she would cater breakfast, lunch and dinners where you could order anything you wanted. If you worked, past 7 o'clock at night and you wanted to eat, all you had to do was call Spagos or Chasen's, and it was on Milken's account, because if you were working, he would pay for your meals. But all the meals that were done there for the Milken group, which was on the second, third, and fourth floor, when they were done, Margot would prepare the leftovers and bring them down, to the Drexel Burnham Commodity and Stock department down on the ground floor. So that's it. The main thing I remembered, I remember a lot of things, but Mike Milken was really big into popcorn. And he had a professional popcorn machine. I mean, the really, really good kind, like you see at the carnivals, with the red and the wheels and all this stuff. And this was on the third floor. But this was reserved, only for Drexel employees in the Milken group. Fortunately, my secretary, Connie, knew all the other secretaries, so she could go up on the private elevator, pick up my popcorn, and bring it down to me. So I had popcorn every day, that I wanted it, which was almost every day. But it was really just a different culture. And some friends called me yesterday to remind me about the 18th of October and how much fun we had. And the thing at Hearst Castle was just really so those were spectacular days. And then on Sunday night on the 18th, I took Jill home, and I for some reason I happened to call Jim Twentyman, and I asked Jim, just to see how he's going on, because he was living at the house in Pismo Beach, and he said, Larry, he said, there's something really crazy going on. He said, because the Swiss franc is up 250 points. And Jim was, he was big in foreign currency trading. And so I started to check in, and I found out that there was really crazy stuff going on. Gold was up about $40. So I knew it was going to be crazy. We didn't have the overnight markets like we had now. You had to make calls. So I called the Drexel office in, New York to find out what was going on. And I realized we didn't have overnight trading, of course, in any of the futures or anything. So they thought the stocks were going to be weaker. The Dow opened down, I believe, 200 points that day, to be down 555, down 16.5%, making it the best buying opportunity of the 80s. The low from August 9th, 1982, to the low on October the 19th, 1987, 5 years later, was a perfect, to the exact tick, I don't think it missed it by more than 2 or 3 Dow points, of a 61% retracement of that whole move. And from there, we've had a high of 18,500. So that's the skinny on what happened on the 18th. There was virtually no trading going on after about 2.5 hours. All the traders would leave the pits in the futures markets because they didn't want to suffer an out trade. The bid and offer, the S&P was trading at, I believe, around 220 at the time, down about 40 handles, which at that time, when you stop and think how much it was, $500 a point, that was over $20,000 a contract. And the bid and offers were around $5,000. In other words, if you wanted to buy a contract, you had to buy it, you had to pay up for it, and if you had to sell it, you had to, lower the bid. So the spread on it was like 15 or 20 points. There was just no liquidity at all. Then the plunge protection team was formed overnight, and what happened was Greenspan basically went to the banks and said, the vaults are open, start buying. That's exactly what he said, and that's what happened. We'll be back in a minute.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and I posted the chart of the German DAX into the room like I try to do at the start of each show. That gives an idea of the tone of the market going in for the S&P, and as you can see, the DAX gapped up after making a 50% retracement yesterday. We're now above the 78% level, so there's a bullish bias across the pond over in the UK and then also in Germany. Whether that carries through or not, we'll have to wait and see. The key figure to look at from the perspective of A, B, C, D, and Fibonacci is the 2156 level in the S&P. We're trading about 20 handles lower than that right now. If that were to happen today, that would put the Dow up about 300 points, I believe, but that would certainly tell us that we're getting ready, for a huge leg. Remember our good friend Bill Meridian from Cycles Research in Vienna, Austria, was talking about a low coming in around the 14th of October. The low actually came in on the 13th. That's when we hit the that 21 and change in the S&P, and so far we've rallied quite a bit. Right now, what we're doing is we're completing an ABCD structure on the 30-minute chart, and that's why this 2156 level is so very, very important. As you'll recall, yesterday we were talking about the possibility of the gold market, making a significant bottom in here. So far, we've been able to rally up a little bit. We've rallied about $20-some off the bottom. In fact, almost exactly $20. And we did stop right at those really key numbers of 38% off the December low and 78% retracement off the May low. So any move above 1266, our high today, I believe, has been 1265. So if we can get above 1267, I would think this would be the start of the breakout to the upside. So it's still a bit early, but it certainly started in the right direction. Silver's acting just a tad weaker, but it's still doing okay. And platinum is also, playing catch up. And we've looked at platinum before because it had that really strong move, from the downside and has bounced up a little bit. But it's still a bit early to see if it's going to move, dramatically from this level. We will look at it here on the platinum because I really don't trade platinum anymore. I haven't for a long time because gold and silver give you all the volatility that you need, and it is better liquidity. So that's part of the reason that we're watching these things. One of the things you want to look at today, folks, is a possibility of some more rally here in Treasury bonds because we had a good 1.5 rally off the bottom, that 162.10. This morning's pullback was a 61% retracement at the 163.09 level, and if we can get that moving, it's got a chance. And the reason why, folks, is just extremely oversold. I mean, this thing has been down for it only had 2 up days out of the last 14 days, I believe. So this has been under a great deal of pressure. So it's just alleviating that short side pressure right now with a little bit of a bounce. We need to in order to get bonds bullish again, which is going to be, I think, relatively difficult. You'd have to get them, quite a bit above the 167 level, which is, 4 handles, from where we are, right now. So those are the things that I would be, sort of, paying attention to if you're in that bond market. But right now, we should be in a little bit of a bounce from this level. And it really, the 167 just takes you back to the high, the 61% retracement for the high, back on, September the 28th. So this is it. It's in a down market. That's basically, what you're looking at right here. So keep in mind. We've had a question about the VIX index, and basically, I've been very, very friendly to this for quite some time, and I believe we are probably going to be trading just a little bit below 16 this morning. Let's just put this up here so we can take a look at it. We were looking to buy this, which we did down around the 13 level here about a week ago. And what I would do is, if you're in this particular trade, because the possibility of this thing breaking out, if you see any move that the market trades below 14 in the VIX. We bought this like 13.20. So any move below 14 in the VIX, I would even 14.99, I would just exit the thing for a small profit and just stand aside to see what the next thing is going to be. Because remember, we've got a Federal Reserve chairman that's fighting for her job, much like a lot of people in politics are doing right now. And I don't think they're going to let this market go down if they, and they can keep it up. We've already seen it with quantitative easing. I mean, Shane Schmolian from Wolf Trader has shown us how the Federal Reserve buying just brings the, market at key times to higher levels. And Yellen does not want, to lose her job. I mean, she's got one of the most powerful jobs in the world. This is it for her. She's in the, the 7.5 furlongs of an 8 furlong race. So there's no way that she's going to let this thing go down, in my opinion. So you want to keep that in mind because if we do get below 15, anything below 15 in the VIX, and I'm not sure, it closed at 16 and change. So if it gets below 15, I would suggest you, stand out of the way and see what's going to happen to the next in the next move. That's basically the bottom line of what I would be watching at this time in the VIX. The key levels of resistance in the S&P are at, of course, 2155. We've talked about that. In the NASDAQ, that comes in at around 4870, I believe. That's about 40 handles from where we are right now. So those are pretty much things that are going on. I've had some emails from folks to ask me to comment about the political stuff. Folks, I really don't want to. It's just I just never seen anything like this before. My father was in the Democratic machine for many, many years, and I just know how corrupt it was in Indiana and Illinois when I was growing up. And it was not fun. In 1980, when I first voted in the Kennedy-Nixon, my father went into the voting booth voting booth, and he voted 7 times for Kennedy. And he said, I want you to pull that lever 7 times. So I did. I put it on the Republican side, and I pulled it 7 times just to even it out. But it's just, some of these places are just incredibly, I mean, it's just amazing. And the fact that we're seeing some of this stuff come out now shouldn't be a surprise, but we got to clean it up. The one good thing, folks, and this was brought out by, I believe, I don't remember, I think it was Newt Gingrich a couple days ago. No matter what happens here, we're going to survive. We've got some really great people in this country. You can't build these tech industries without these really, really smart people that have some fabulous brains. And, I'm talking about Elon Musk and some of these other dudes that are out there. There's a lot of other guys. Even though Jobs is not with us anymore, he's got some smart people there. Those are the things that will keep us going. We got to keep our Constitution together. Those boys that did this back in 1776, they flat out knew what they were doing. So we do need to keep that Constitution together. Okay, that's the end of the politics. Getting back on the track here. Someone had a question about the market from 1987, folks. We don't know if that's going to happen or not. You don't want to bank on that.
Larry Pesavento has just announced a special offer for subscribers to his trading service, Fibonacci 24/7. Right now, you can get a month of Larry's Fibonacci 24/7 while gaining access to his upcoming live webinar, The Pattern That H.M. Gartley Missed, taking place Wednesday, October 26th. This live workshop will be archived for subscribers if you cannot attend live. And if you order right now, we'll also send you a copy of Larry's book, A Trader's Guide to Financial Astrology. This book retails for $90, but we'll send it to you as part of this special offer that runs through the night of the workshop, Wednesday, October 26th. Sign up now and get a free copy of Larry's book, a month of his Fibonacci 24/7 trading service, and a live workshop on the pattern that H.M. Gartley missed. With a 30-day money-back guarantee, this is an offer that you can't let pass you by. Sign up today for Fibonacci 24/7 by visiting the front page of TFNN.com. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks. I posted this chart that many of you have seen on the internet. This is from Business Insider, showing the relationship between 1987 and where we are right now. Whether this will happen or not, who knows? The anniversary date of this is, of course, tomorrow. But, I look at the Bradley model, and all I can tell you is the Bradley model should be heading down. But if this is inverted from this level, we should be up for several months. That's all I can tell you. The key level to look at is 18,400 in the Dow. If we can get it above that, then it is a really has a possibility of a pretty good breakout, to the upside. So you want to watch that level very, very closely. That level in the S&P, of course, would be around 2180. That's still quite a ways from where we are right now. But to make the number of times you see something like that happen, it's an outlier event, folks. I mean, this only happened, several times in the last 100 years. 1929, it happened. And as a matter of fact, it was crazy. In 1929, when the market broke into October the 19th, it went down into early November, and then it rallied 60%, almost 61% into April the 1st of 1930. And that's when the real bear market started. From 1930 to 1932, the Dow lost 90% of its value, and 16 of the Dow stocks went bankrupt. I don't know if you know this or not, but I believe American Telephone and Telegraph has gone bankrupt twice. And, everybody uses telephones. So this is some of the things that you got to keep in mind when you're looking at this. This is why technical analysis will help you along the way. You don't have to listen to the rhetoric that's out there, and just let the charts, sort of tell you which direction you're looking as far as the direction of the market. Let's see how we started out here this morning. We're still quite a bit up. The S&P is still up about 12. The Dow's up close to 100, and a lot of that is based on some of the stocks like Goldman Sachs is giving it a big jump. IBM is a drag on it. So these are, this is one of the reasons why the Dow is so difficult, because it is a price-weighted index. It's not a cap-weighted index. A cap-weighted index is where you take all the shares and then you multiply it by the value of the shares, and that tells you how much it's worth. And that's, I believe the most, I think Amazon might be the most highly valued company now, but I'm not really sure of that. For many, many years, it was General Electric, and then later on, I believe Apple took over. But these tech things have gone absolutely nuts. Like today, we have a news announcement. Someone's asked me to talk a little bit about Netflix, and I don't know a lot about Netflix because I don't trade the stock to speak of. But all I know is that it's having a tremendous run here early this morning. And if I can bring this up, there we go. We'll take a look here at Netflix. It's trading at up about 20% at 118. As you can see, there's a really nice 20-man line there that hit just a few days ago. That was a perfect 61% retracement at that 98 level. It acted technically, it was doing pretty good. And now what we've done is we've completed the really large ABCD pattern from February into April, and then the 78% move down to 85. And if you add that together, that's going to get you to the 119, 120 level, which is the 78% level. But you're going to leave one heck of a gap here like you've never seen before in Netflix. This will be the biggest gap ever. From 100 to 118. So this is a 20% gap. It will be filled. Whether it'll be filled in our lifetime or not, I'm not sure, but this is what it looks like from Netflix. If you got the information yesterday to buy the calls yesterday at the close, I hope you made some money on that. And if you believe that, we still have 3 shares of the Brooklyn Bridge available for you folks. So I was just joking. We never made an inference about buying Netflix or calls like that. But you always hear people, saying, well, I bought this the night before. Yes, we hear about this all the time. Okay, let's move on here. The market's moving pretty good this morning. We got the Dow is up 128. The S&P's up 14. and the NASDAQ is up about 39. The key levels to watch, of course, are 20. There is still 20 handles away in the S&P. So this could just be, another rally going on. This we don't know. So that's one of the things that we want to be watching. Okay, let's see. We have a caller from Singapore. Mr. William, are you there?
Yes, I'm here, Mr. Pesavento. Good morning.
How are you? What can I help you with, my friend?
Yes, I think yesterday I listened and you mentioned about the gold, and you said that there may be a possibility that it may reach 1242 again. So I'm just wondering, what is that possibility, and then is there a way that we can calculate that probability of happenings?
No, William, there isn't. And I was thinking about that when it was trading at around the 1257 level. Now we've rallied up another $10 from that level. So there's still a possibility, but any move that we get in gold above 1267 to me would tell me that the 1242.30 was going to be the low, and we're not going to get down there. So that's the main thing. What I'm looking at right now, William, is the fact that gold has got a positive bias to it right now because we've had a $20 rally. And what I'm watching to see is if it can back off $11 from any high. So we had a high today of $12.65. If we back off $11, that'll take you down to $12.55. And that's where I'd really like to, 1255, 1254, that's where I'd like to take a look at. That would be a 61% retracement pullback from the recent move that we had. So that's the main thing that we would be looking at. So we'll see.
But we are now actually quite close to that target of 1255 to 54 that you mentioned, because as you said that we reached a high of I think 1265 just now, and then it retraced back to about 1257 now.
Yes, I see that, but this I know it's 1257, but like I mentioned before, I want to see how it looks at 1255. That's $3 away. I don't want to take that $300 risk because it's not a number that I'm comfortable with. And the other thing is silver's not acting that well, and platinum is not acting that well either. So, we still possibly have a chance of making that 1242. So just be careful in here. Be careful all the time.
Okay, I will. Thank you very much, Mr. Pesavento.
Hey, how's your air quality over there? Is it getting any better?
Yes, it's not too bad. I think this year is better than last year, so we don't have that much of the haze. Yeah.
Oh, that's good.
Not most of the time, during the previous year at this point in time, we have a lot of haze around.
Mm-hmm. Well, that's good. Well, so you live in a beautiful country, my friend. I think it's a fabulous place.
I think it's pretty nice, except that the haze always makes us having headaches during these periods, and I think some of us would like to go out for a short trip, hoping that after we get back, everything will be getting better.
That's good. Well, we always enjoy you calling in, William. Thank you very much, and enjoy the full moon if you can see it.
Yeah, I'll try, because we have too many buildings. When I walk out, everywhere is building. So they're probably blocking us. Thank you very much.
Okay, thank you, my friend. Bye-bye.
Thank you. Bye.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, folks, we're going to take a look at the NASDAQ on a daily basis here. As you can see, we had this very large ABCD pattern complete back in early October. We came down into last Thursday. As you can see, we made a perfect 50% retracement of the move from early September, and now we're making a retracement back, 61% retracement back. We just hit that a little while ago, inter evening, I guess, before the regular market opened. A lot of that was due to the emotionalism of Netflix being up 20%. So that's something that you have no control of, but you know that these markets are very, very active. I don't know if Netflix is in the NASDAQ 100 or not. That's one I'm not sure of. Probably ought to double check that. But the pattern in the NASDAQ is still has a potential for a pretty good move to the downside. If you look at the move in November of last year, you notice that we made the high, we broke down sharply, and then we rallied back one more time to a 78% retracement in early December, and then we had the big move down where we dropped 10% into early February of last year. So this is where we stand right now. We're still not out of the woods, but you'll have to be able to determine the bullishness of this. If we get above 4880 in the NASDAQ, you could be looking at something, tremendously bullish. So you just got to be careful. Just, when you see these things, and for me or anybody else, it doesn't really, you have to prove it to yourself. Take responsibility and look at it yourself. But when someone shows you something like Business Insider showing the relationship, that's something to know and something to pay attention to. But don't get locked into thinking it's going to happen, because remember the words of Tony Robbins. All of our frustrations in life come from expectations that are unfulfilled. Whether it's your spouse, your children, the markets, whatever it happens to be, your boss. When you're expecting something and it doesn't happen, you're disappointed, and there's where the problem lies. And it happens the same thing in the market. That's why, remember the words of Roy Longstreet. The first mistake teaches you, the second mistake kills. So just remember that after you do the first mistake, don't do the second mistake. And remember, it's much better to be out of a market wishing you were in than in a market wishing you were out. For a perfect example is someone that might have shorted Netflix on the close yesterday looking for some really bad numbers. Look what he's looking at today, a market that's up 20%. So these are some of the things that you got to pay pretty close attention to. Regarding the S&P, our first level of support here is right around the 2135 level. That's close to where we are right now. That's a 61% retracement of that overnight low that we had at 2132. That small move, of course, 8 up, 5 down, tells you there should be a little bit of support at the 2135. And anything below 2132, then you're looking at a totally different structure of what the patterns look like. But right now, there should be some support holding at that level. Okay, another question about the gold market. I don't really know, what's going to happen with the gold. I'm watching for a possible $11 break. That would take us down to 1264 in the gold. That would be a spot where you'd have a possibility of a pretty good retracement level. That would be a 61% retracement off the low at 1250. So that's just a number to look at. And the last corrections we've had in gold in just the last few days have been around $11. So that's all I'm doing is to see if the market will repeat that $11 move again. That's really all I'm looking at. Okay, one other question. Someone's asked me a question about Apple. Apple to me, I think is going to have a lot of trouble in this 120 area, 119, 120. That's just my feeling on it. By the way, someone's asked another question. If they had to put a little bit of money in something, let me take a look here at something that looks really interesting from a technical basis. I don't do stocks very often, but here's one. This is McDonald's. If you'll look at McDonald's over the past 10 months, you'll notice we have the major head and shoulders pattern. The head was 1.618 of the left shoulder. The right shoulder was 78% of the head. I mean, that's just absolutely a perfect ABC to the downside. We've taken out the lows of February at 112, but look at the pattern that's down here, folks. Over the past couple of months, we're making a really nice butterfly pattern. And a really strong support area. So keep an eye on McDonald's. If you wanted to buy a stock and not risk very much, I think this would be the one to look at because you don't have to risk more than about $3 a share. Take 3% of 112, you're looking at about $3.50 would be your maximum risk. Now, the news or the earnings come out on this on November the 10th, so that's still 3 weeks out. But you might want to watch this because it's in an area where it should have some, pretty good support, from a technical basis. And, Mickey D's is not going anywhere. If you remember back in 2003, 2004, we were completing the big bear market. McDonald's got down to $11 a share, folks. It was actually traded right at $11 and $11 and $12 for quite some time before it started moving higher. Part of this was because of the fact that the economy had turned, but also they tried to change their diet to more healthy things, bringing in salads, and then they brought in their coffee bar and yogurt and other things too. So these are some of the things that you're watching when you're looking at McDonald's. It's a very well-run company, and I think that they'll probably be around a long time. When I was a kid, back in Terre Haute, Indiana, in 1955, we had our first McDonald's, and it was for 45 cents. You had French fries, a milkshake, and a hamburger for 45 cents. And 45 cents was a lot of money in 1955. So now times changed. A McDonald's franchise at that time cost $5,000. That wasn't the building. That was just the franchise to use the Golden Arches. And that's when the year that they came out with the Golden Arches. So anyway, there's a little bit of history from Terre Haute, Indiana, where I was born and raised. Question about the VIX index. We mentioned that, the importance of the VIX index at this 115 level. Let's just take a quick look here to see where we've opened this morning and see if we've broken. We got down to 1550 has been where we're trading now. 15.30 is the low. Anything below 15. If you go below if you see a trade of 114.99, just take the profits in the position and stand aside. And the reason for that is that you just don't want to risk anything from this level, and you have to protect yourself. And so that's the way I would try to do it, using that as a parameter to keeping it. But remember, these markets are very active. They give up quite a bit. The news coming across either from Mosul or wherever they're fighting in Iran, Iraq. Anything can happen. We have a lot of things going on in the world, geopolitical and military and everything else. So we've got to watch things that are happening, on a global basis. You usually see some moves like this in gold, but we certainly haven't seen that. Gold's been able to rally $20 off the bottom, actually $23 off the bottom. So watch for $11 pullback around 12.54 to see if that's going to hold, and that would be a spot where you wouldn't have to risk very much if you wanted to be a buyer of gold. 877-927-6648.
My name is Steve Rhodes, author of Mastering Probability and host of the Trader's Edge Show heard daily here at TFNN.com. On Wednesday, October 19th at 5 p.m., I'll be hosting a special one-hour event, Trading Range Boundary Lines, where I'll teach subscribers how to identify hidden support and resistance levels, the kind that you definitely need to be aware of for your trading and investing. You'll learn how to plot major horizontal support and resistance, how to identify breakouts and breakdowns, and how to project the next price move. These support and resistance levels work for stocks, ETFs, futures contracts, currencies, and these patterns work on every time frame. By signing up for Mastering Probability right now, you get the first month of my newsletter service for only $49, and that includes October 19th's Trading Range Boundary webinar. Plus, if you sign up now, I'll include access to my 3 one-hour workshops, the ultimate trading signals, the ultimate reversal signals, and the long-short line that every trader needs to know. This is an investment you won't regret. For all the details of the upcoming workshop and reserve your seat today, visit the front page of TFNN.com now.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, the next thing we want to talk about here is the price of the crude oil. We're still trading near this $50 a barrel now for I don't know how many weeks, but at least 3 weeks we've been at this level. That's usually bullish if you can stay at this level, but a breakout would have to occur if we get above $52 a barrel, which is a good 4%, from where we are right now. As far as support, there should be pretty good support around 48.50 in the crude oil. That's down $1.50 from where we are right now. So that would complete an ABCD on an hourly chart that should give us some pretty good support at the 48.50 level basis the January crude. The question we've had in the den here about the corn, we talked about corn last week because we were making an ABCD structure there at the 358 level. We went down to 350 yesterday. Rallied up a little bit. Now we're trading at around 353. If you happen to be in that, if it gets above 358, I would put a stop at the break-even spot there and not mess with it because, there's a possibility that these markets could, for some reason, whether it's Fed-related or not, make the market move quite a bit. Okay, now the next question that someone asked is about the Treasury bonds. One of the folks in the room this morning were buying Treasury bonds down to that 163.09 level. We've now rallied up around $320 up to 163.20. There is an ABCD structure that could take this thing all the way up to 165, which is a 1.5 points away. That would complete an ABCD pattern in a bear market, which would be a spot where I would be looking to sell the bonds because we've had a lot of selling over the last 10 or 15 days. And so what we're doing now is seeing short covering against that. Is the way I interpret that. The overall picture of the bonds looks very, very bearish. If you look at that daily chart that I posted in the room today, you can see the importance of the 163. Live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.